We had a Bollinger Band RSI opportunity this morning where we had bullish divergence below the bands, and the first spike, which we measure the divergence, was below 30 on the RSI. So lower low on price, higher low on the RSI, and then you take a long, put a stop underneath the low, and you look to target the median line. And this particular idea was about it was actually 6.72 to 1 reward. It hit the target with a zoom, and yeah, that's pretty good. In fact, actually, we can probably just go and update this now. We'll just add 6.7. There we go. Let me get rid of that because we moved it to break even. I've just lost my chart. There it is. So that's just carrying on from the video that I created last week where I was going through and testing it. So we're just carrying forward testing this now, moving on. And I mentioned in the webinar this morning that the strategy is useful when it comes towards the end of a trend or when it's ranging or consolidating, but it's actually quite poor when you're trending. So for example, we were trending lower, I think on Wednesday or maybe Thursday, at 3 losses in a row as they all burst below the bands. They created this bullish divergence, but it was continuing to fade lower, to fall lower, should I say. So there were 3 in a row that lost, and there was potentially another one here that you could have bought, but 3 losses, walk away. And I think Friday there was another one, or Thursday there was one that was also another loss. So there were 4 losses in a row totaled, and this morning's one has kind of made up for all of those, which is good. So as far as the DAX is concerned, buying and selling, we've got this hour chart here, which I've marked out some previous zones of interest. And I think that if we want to be a seller on this market, you want to look to sell from one of the previous zones where sellers showed up. So 1277, 12276, 12347, I've marked out on this chart. I think we can probably say that that area got a wash this morning. And so you could even now say that the 12,000 level is the place to sell, or even current levels if you're aggressive. Got a couple of exposed POCs above us, but they're at 12,449 and 12,254 at the moment. And we have already taken out Fridays, which is good. We've tagged the value area high from Friday. So it's starting to carve out a strange kind of double distribution here in the value area for today. But that's kind of what I'm thinking. I'm looking at short in the market just simply because the swings are bearish below 280, 12,280, but I don't want to be selling at the bottom. I think this is potentially forming a pivot component for a reaction leg. What I mean by that is when you get this kind of wash immediate recovery, it suggests it's at the bottom of a pivot. And so you've got your swing, your major swing lower here. And probably just isolate this swing, I think, from here. So you've got this swing lower. You've got this kind of looking like to be a pivot component, which suggests a bounce to create a reaction leg. And then you want to, who knows where it's going to stop, but you want to be selling at the top of that reaction leg.